So you want to learn how to trade but don't know where to start, keep on watching. First things first is you're going to have to understand what a candlestick is. So that little black line in the upper part is called the upper wick, and that little black line in the bottom part is called the lower wick. Some people call it shadows, some people call it wicks, up to you. And that little green little box is called the body. So that is the three characteristics of a candlestick. Okay, so remember earlier we spoke about the upper wick. So the upper wick is classed as the highest price of the day. Let's just use the daily time frame, so it's the highest price of the day. And the lower wick, remember earlier we spoke about lower wick, which is the lower price of the day. And then the upper body is the closing price of the day, and the lower body is the opening price of the day. And as we mentioned, we are using the daily time frame. If it was a 15-minute time frame, you would say, for instance, the highest price of the 15-minute time frame. Okay, so a green candle means that there is buying pressure. This means that it is a bull candle. Think about it this way: bull, it goes fast, people are trying to buy. And then the opposite, it is a bear candle, which is red, which essentially means that there is selling pressure. Think about it this way: bear, it's scary, people are trying to run away from it, so they're trying to sell it. So the characteristics of the red candle is very similar to the green candle in terms of the high and the low, so the upper wick and the lower wick. However, the body is the opposite. So the upper body is the opening price, but in the green candle it is the closing price, and then the bottom body in the red is the closing price, and the bottom body of the green is the opening price. So they're just the opposite of each other. I know it sounds a bit confusing, so what we're gonna do is I'm gonna quickly just map this out for you. So think about it this way: red candle is trying to go downwards, right? So it makes sense that the closing price wants to be lower, right? The closing price wants to be in the bottom body because it's trying to close lower. It's not trying to close higher. Remember, low, low, low. Now, on the green body, is trying to go up, right? So, of course, the closing price wants to be up. The closing price wants to be up. The closing price wants to be up. So, yeah, I hope that makes sense. And yeah, that's how you read a candlestick. Fairly easy, right? If you guys want to understand more about candlesticks and the history behind it, I've done a YouTube video, so go check that out. And I advise you guys to open a TradingView account. The free version, you don't have to pay for it. Open up Tesla for now. Look at the green candle and look at the red candle and literally just apply what we learned today. And then play with the daily time frames. So for instance, let's say you're on an hourly and be like, oh, okay, so this is the green candle. So this is the opening price of the day, which shows buyers are in control. And then you do 15 minutes timer. You'll be like, oh, okay, so this is the opening price of the 15-minute time frames. Within this specific candle, the sellers are in control because it's red. Literally so simple. So yeah, follow me for more tips on how to trade.